To the eighth and final installment of the Wharton Global High School Investment Competition Meet the Experts series. I'm Eli Lesser, and I'm the Executive Director of the Wharton Global Youth Program, as well as your moderator for our conversation today. Really excited all of you are joining us. Before we begin, I want to remind you that the mission of the Wharton Global Youth Program is to mobilize the extensive opportunities of the Wharton academic community to educate, inform, and inspire pre-collegiate students like you to explore business practices, analyze the world's complex challenges, and take the needed steps to become the leaders that will transform our global economy. In addition to the annual investment competition of which you are currently participating, we offer summer and academic year programs, as well as the only online business journal written exclusively for high school students. I encourage you to explore the Global Youth Program website to learn more about all of these amazing opportunities. I want to take a moment to thank our entire global audience for joining us today. Please do us a favor and post in the chat channel where you're connecting from so we can see where you're calling in from today and connecting and listening to us too. So give us a shout out real quick so everyone can see where you're from. All right, it's incredible to see so many great students out there from all around the world tuning in, so let's jump right into it. So all of you hopefully have now submitted your mid-project report. They're all submitted and locked in, and you're off heading towards the final competition deadline later this calendar year. We're excited to provide competitions and new learning opportunities like Meet the Experts, our weekly live interview. If you've missed any of the previous 7 of these, please do us a favor, check out our website, and you can watch the archives. So I encourage you to post questions as usual. If you've tuned in before, right in the Q&A panel. We'll have plenty of time for student questions at the end of the conversation. We're going to carve out plenty of time to get your voice included in this. So let's get started. Today we're delighted to welcome Burcu Esmer, full-time lecturer of finance at the Wharton School. Dr. Burcu Esmer is a senior research fellow here at the Wharton School's Joshua J. Harris Alternative Investments Program and a member of Wharton's finance faculty. Previously, she was a faculty member of the Kelley School of Business, Indiana University, and Bilkent University in Turkey. She received her PhD in finance and a Master's of Arts in Economics from the University of Iowa. Professor Esmer's research interests include empirical corporate finance and alternative investments. Her most recent research focuses on agency conflicts in financial contracts, mergers and acquisitions, and private equity investments. Her work has appeared in leading academic journals such as the Journal of Banking and Finance and Applied Mathematical Modeling. Professor Esmer teaches extensively on private equity, mergers, acquisitions, corporate finance, in executive and degree programs at the Wharton School. She's also taught courses on economics and statistics. She received the Teaching Excellence Award from the Wharton School and a Thank the Teacher recognition from the Center for Teaching at the University of Iowa. Professor Esmer also serves on the advisory board of Girls Who Invest, a nonprofit organization dedicated to increasing the number of women in portfolio management and executive leadership in the asset management industry. Welcome, Burcu. It's great to see you. Thank you for joining us this Friday afternoon.
Hi, Eli. It is great to be here. Even it's virtual, it is great to be with you. I wish I could see the audience, but I'm monitoring the chat at the same time. We have people from Dominican Republic, India. It is amazing because I thought it was already too late in US. So it is great to have the global representation.
We have absolutely remarkable students in this competition who are joining us. We've had amazing conversations with so many great leaders in the finance world and from the university and from Wharton over the past couple of weeks, and so I'm excited that you're wrapping up our program with us today. So let's jump right in. Tell us a little bit about your work at the Harris Alternative Investments Programs here at Wharton.
So we do research on alternative investments. We collect data, we analyze data, and we try to shed more light on the alternatives, which is not a very easy area to do research on because of data limitation. And we constantly update our curriculum to incorporate the changing trends in the space. Just to give you an idea, I don't think this is the case in any other college, but we offer 12 sections of Intro to PE, 3 sections of Advanced PE course, distress investments, shareholder activism classes, hedge funds, venture capital courses, and as I said, we constantly update the curriculum. We also organize conferences and seminars and guest lectures where we bring students, practitioners, alumni, academics, and policymakers together.
Okay, so you just used an acronym there, PE. Tell us about PE, because for the students listening, PE is physical education.
Sorry, yes. I spend pretty much like every day in my life teaching private equity, which is PE. Yeah, thanks.
So now take it one step further, define private equity.
Okay, so let's define, okay. If you go back, everything was private equity. This is the oldest source of capital. Everything was private up until 17th century. So in 1611, in Amsterdam, the Dutch India company decided to go public. They actually issued bonds and stocks to general public. So up until 1611, everything was private debt and private equity. So if it is not sold to the general public, if the shares of the company is not sold to the general public, then that's a public equity. That's a private equity.
Perfect. As a former history teacher, I love when someone goes back and gives us the historical roots of everything. So thank you for doing that. So let's stay with this theme of really kind of breaking it down to the bare bones. If you're teaching someone investing who has very little experience, now our students have a lot of experience because they've been jumping into this competition, but let's pretend they have a little bit of experience. I think, kind of on the level where you teach at the executive or the MBA level as well, they would have minimal experience. What's your approach? Where do you begin by teaching someone about investing?
I like starting with the basics. So when before talking about investing in alternatives, we need to really understand how to invest in traditional asset classes, meaning like stocks or bonds, fixed income securities like bonds. And then, like, as an individual who would like to make investments, probably the bonds would be the safest place to start. So you can buy bonds of the government. So you can buy treasury bill, for instance, or treasury bonds. And then, depending on your risk appetite, you can move to picking stocks. So probably it looks like this is what the students are doing, right? This is a stock pick competition, so this is it is where they are. But I always say, like, you need to understand the fundamentals first. You need to understand the valuation first. And if you're buying stocks, for instance, the price you see is not necessarily the value of that stock. So price and value can be different things. And as Warren Buffett says, price is what you pay, value is what you get. When we look at traditional asset classes like stocks or bonds, it is easier. It is tough, but it is easier to be able to understand the value of these assets. So I think everyone should start with the basics before moving into alternative investments. You need to feel comfortable with our traditional asset classes.
Okay, so let's make that move. What exactly are alternative investments?
Okay, that's a great question. There's no good definition of it, but we started talking about traditional asset classes, right? We said, oh, there's public equity. And also, I want to give you an idea about the size of the market. Worldwide, the value of all public equity is around $80 trillion, 80, okay? And then we have public fixed income securities. So we can have we have corporate bonds or we have government bonds. These are issued to public. These are public fixed income securities. And the worth of this asset class is also 80 trillion, the entire world. Then we have everything else. Everything else is actually alternative. So yes, if you can put maybe currencies in traditional asset classes, so you can buy euros, or you can buy, for whatever crazy reason, you can buy Turkish lira, for instance, as an investment. But other than that, everything else you can think of can be more or less like put in alternative space. So what do we have in alternatives? We have private equity, and I already mentioned it. If something is not, if we are looking at, let's say, business, and if it doesn't have publicly traded shares, that's a private company, right? So we have private equity investors. We have private equity shops like Apollo, Blackstone, Carlyle, TPG, KKR. These are private equity funds that invest other people's money. Within private equity, so we have a very young crowd. I'm sure they're more interested in venture capital. Venture capital is within the private equity space where these venture capitalist firms invest in early stage companies. So these are a little bit high risk companies. We have private debts. You have a business, you want to grow the business, you don't have the money to expand, you don't have the assets to expand. You can go to a private debt fund and you can borrow money from them. This is private debt. This is different than issuing bonds and sell it to the public. Then we have real assets. We have real estate, for instance. These are the development and purchasing of assets which create a regular income stream through leases. I don't know whether there's anyone from Chicago. I'm sure you know the Willis Tower if you live in Chicago, or maybe as a tourist you visit it. Willis Tower, for instance, is owned by Blackstone, which is the largest real estate investor in the world. Then we have infrastructure. What is infrastructure? Infrastructure is similar to real estate, but with longer investment periods. Let's say, if you think about toll roads, these are infrastructure investments. Let
me ask you one thing. A question about alternative investments. So when you talk about private equity, or you talk about private investments, a difference than public is regulation.
Oh yes.
So can you talk a little bit about regulation and where regulation falls into alternative investments?
That's a very complicated question, because within alternative investments there are so many different asset classes. But I can generalize and I can tell you this: alternative investments are subject to less clear legal structure compared to conventional investment. Yes, some of them are subject to the examination by Securities and Exchange Commission in US, but majority of them don't even have to register with SEC. So they are not really heavily regulated if you think about mutual funds, for instance, there are more regulations there. And for the ones who are watching politics, before the US elections, some politicians were actually pointing this out, and they were saying, oh, we need to regulate alternative investment. Mostly they were talking about private equity, and some people call it pirate equity, for instance. So there's a bad publicity there. For venture capital, so some people call it vulture capital, for instance. So there are lots of arguments against private equity firms as in the media or within politics. So I think we will see more regulations.
As we work towards a definition, as best we can, a definition of alternative investments, many students that we deal with, so we have lots of students and lots of programs that come through and talk with us, high school students that are doing remarkable things, learning about business for the first time. One of the businesses they tell us a lot about where they want to put their money, where they want to make an investment, is sneakers.
Sneakers. Oh, okay.
Sneakers.
Okay.
Buy and sell and trade rare sneakers. Can that be considered an alternative investment?
Yes. I mean, you can think about this is a collectible, right? So you can put wine, art, stamps, vintage cars, even sports teams, right? Like that. These are alternative investment. Cryptocurrency. These are all alternative investments. Yes. So I can totally see it.
Perfect. All right. So if you're looking for your first alternative investment, get in line and get a great sneaker release and sell it back to somebody else, or buy a bunch of people like them, I guess. Okay, let's jump in a little bit more details about this. So our competition limits our students to trading stocks, right? So that's really the kind of heart of our competition. But we know many of our students, and the students probably that are connecting with us today from around the world, are very interested in the larger world of finance. Is it possible for an individual to get involved with alternative investments? And we talked about sneakers, but realistically, in the way that you're talking about them, can an individual get involved with alternative investments?
It is very difficult. So when I say alternative investments, since it's also my expertise, if we think of private equity investments, for instance, it is really tough for us. I'm not even just talking about the audience. Like as a finance professor, it's really difficult for me to go to Apollo and Carlyle or KKR, these are big PE shops, and say, here, take my money and please make investments for me. Many alternative investments have minimum investment requirements, and they have really high fee structures. Even if you want to get invited and make investments in those companies, it is really difficult. So directly, very tough. Indirectly, we are all making alternative investments through our pension funds, for instance. So part of my money is put in a pension fund, and the number one investors in private equity, they are the pension fund. So my money is there. I'm not directly making investment. But for our students and for the audience, there are different websites where you can buy piece of art. You can buy a piece of a vintage car. You can even buy a piece of a cow, so livestock. Like you can do it. And I don't want to give any names. I don't want to endorse any names. But if they Google around, they will see a lot of different apps and websites where they can invest in hedge funds, which is normally very difficult to get into. But there are different rules, there are different restrictions there. So they need to understand the rules of those websites well. But they can start with little money. Another investment I can think of is like peer-to-peer lending or crowdfunding. So if you want to make investments in an early stage business, for instance, there are lots of websites where people introduce their ideas, their products, their early stage products, and you can actually invest in those ideas as well. So that would be another alternative.
So I want to remind the students that as we have this conversation, you and I have lots of questions for you, but I really want to hear from the students as well. So they can use the Q&A panel, and then I'll pull them out for you when we get to that point. So students who have questions for Burcu, please do us a favor and post them in the Q&A panel. We'll be sure to get to those. So why would someone want to consider investing? Let's say they can get in there. Let's say they can get over the hurdle or get an invite or get brought into one of these conversations. What's the motivation? Why do it?
Okay, there are two really important reasons. One, when we look at the returns, when we look at the returns of traditional asset classes, and I will give you numbers to make it clearer. If you invest your money in U.S. market, you put it in an index fund, which mimics the U.S. market, the historical return in such an index is around 8% annual. If you put your money in fixed income securities, like bonds, it is around 2, 3, 4%, depending on which specific asset you're looking at. Yes, you can make investments in emerging markets, emerging stock indices or European stock indices, but the returns are maximum around 10%. When we go into alternative investments, like one of the safest ones is the private equity there. And when I say private equity, I'm not talking about venture capital. I'm talking more about investments in established companies. So these companies have stable cash flows. So you see that there's a history of the company. So there's less risk. The returns right now, it's around 15 to 20%. So one is returns. The second very important reason is diversification. I'm sure the students heard this many times from the different experts as well. But diversification is important because at the end of the day, you want to increase your return with the minimal risk, right? That will be the dream scenario. Take less risk and have more return. That's what you want. And if you invest in traditional asset classes, it looks like when your investments in one group is highly correlated with the other asset class. So correlation, they move positive. They move together so this is bad because if something bad happens in one of your assets classes in your portfolio, it means that your other asset will also be negatively affected, right? And you don't want that. So you can say, yes, I have my US stock market index, and then I will go buy European index, or I will buy like emerging market index. Are you really diversifying is an important question because you think you are because this is a global asset allocation, right? You put your money in US, in Thailand, in Turkey, in Europe, so you think you diversified enough. But let me tell you the empirical fact, it's not the case. The correlation between US market and the other markets I just mentioned, it's really high. So what are you going to do? You're going to move to traditional asset classes like private equity, where the correlation between stocks and the traditional asset class, let's say private equity, is lower. So that's the second reason.
So we talked about, I mean, the students think about this a lot as they're building their portfolio and based on the case study we gave them, they're really looking at this question of diversification, right? And deciding how much of an asset and where to put it and how much. So if you were thinking about this, right, if you were thinking about how much of a portfolio should be alternative investments, right, it depends on the individual in many.
But yes.
Typically, what do you see? I mean, there is diversification within, so from what you defined as this very difficult definition for alternative investments, you might have diversification within your alternative investments portfolio as well.
Oh, that's definitely right. Within the alternative investment, I gave you 10 different asset classes, right? Some of them are riskier, some of them have less risk. And at the end of the day, if you, I'm sure the scholars know the basics really well, the fundamentals. At the end of the day, it's all about, okay, what is the risk of my portfolio? And if I put that extra asset, how does it affect the overall risk of my portfolio? So if you have one asset, let's say, and if you put another one which moves just like the asset you have, just because you added that additional asset doesn't mean that you diversified your portfolio. So this, if you can find this negative correlation or low correlation, that would be the dream scenario. Having said that, you talk about the allocation. I wish I could give you some kind of number. In the past, people were talking about 60 to 40 portfolio allocation. And they were basically saying, you should put 60% of your portfolio to large capitalization, like big companies, S&P 500 stocks, and the remaining 40 should go to treasuries, fixed income security, treasury bonds, or very safe corporate bonds, investment grade bonds. Now things change. So when we look at the investors, again, I'm telling you as individuals, it's difficult to establish this. But when we look at investors, what I see is they typically put 10 to 20% of their money into the alternative. But you're right, within alternatives, where do you have excess is probably where you're gonna go after. If you're okay with taking high risk, you may want to go invest in early stage companies. I personally don't have that kind of risk appetite. Like, I'm more of a safer person. I wouldn't do that. I will say one thing before one interesting thing. And I want to focus on venture capital because of our audience as well. But everybody talks about unicorns, right? Like those very successful companies whose value is more than $1 billion. And probably there you cannot find one successful tech company which was not backed by venture capital. But then, like, when we look at the data, the venture capital success is not that great. So yes, we have that one really good star investment, but nobody talks about unicorns, like that companies. We don't hear about them, right? And I can tell you empirically, when you look at 5 VC investments, one of them is star, yes. 2 of them, you get your money back. 2 of them, you lose money. But like this is the risk I'm talking about. If you're okay with that kind of risk, you can go after VC investments, and you can say, no, if I win big in that one investment, it's going to save my portfolio anyway. So that's another way to go.
Yeah. So along with risk, it comes to the question of liquidity, right? So if you make investments in some alternative investments, how does that affect liquidity?
Alternative investments are generally not liquid investments. So just let me give you an example from the private equity world. If you're a private equity investor, you're a pension fund, you're a pen endowment, you commit your money, and and it may take 5 to 10 years for you to get your first check from the private equity fund. So these are really illiquid investments. And some of them, if you think about like art, for instance, some of them have low demand anyway. So even if you want to sell what you have, it may be difficult to find the buyer. So that there is another issue there. And of course, with alternatives, there are issues like high purchasing costs. I talk about the fee structure. It is really difficult to be able to get into the alternative space anyway. And of course, all of these are the risks, additional risks that comes with alternatives.
So I want to pause on alternative investments for a second, and I want to get to another area of your work, the first place that you and I met. And so you're on the advisory board of the Girls Who Invest. And we had the opportunity to speak in this Meet the Experts series with Seema Hingarini, who is the founder and kind of visionary for this remarkable program, Girls Who Invest. We spoke to her last month. Our competition has seen an increasing number of young women competing and leading teams in the past few years. What role do you see women playing in the financial services industry?
Every role, from the entry level to top C-suite executive level, everywhere. And if you have time, I'd like to talk a little bit about this.
Please, yeah. Please tell us a little bit about Girls Who Invest.
Okay, first of all, Seema, she's such an inspiring woman, and I love working with her, and I've been with her almost from the start. Like 1 year after Girls Who Invest was founded, I joined them. I lead their Wharton program as well. So I prepare their in the summer program where we teach scholars. But I'm an academic, and I will give you empirical facts again. Okay? I'm not going to bore you. Don't worry about it. But when we look at the financing industry, females represent almost 50% of the workforce, which is great. So, I mean, it looks like there's an equality there. But when we go up in the career level, this fraction goes down to 15%. Yes, some of it can be internal reasons, right? Like if you, as a woman, if you want to raise kids, if you want to focus on your family, that's a decision, that's a choice, which is perfectly respectable. I mean, it's perfectly respected. But there are some external factors. The finance world is mostly a men's club, so it is difficult for women to feel heard in such an environment, and this needs to change. And by the way, this is not just about women, like gender issue. This is also race and any other diversity you can think of that's important. So when we look at the data, when we look at academic studies, we see that women make better financial decisions based on risk compared to men. And unlike what people think, women are less emotional when it comes to trading. They trade less frequently, and their return performance is actually better than men. They invest more in socially responsible products. They have better relationship with employees and customers. And these are not biased studies. These are academic studies. The board engagement increases if there are more women in the board, for instance. And these are all amazing. And I want to expand it to all aspects of diversity as well. If there is more diversity, there's more creativity. Think about the board. Like we have finance majors. Like there are 8 people, they're all finance majors. I'm sure they're very smart. Like I'm a finance person as well. But it wouldn't be better if we have some engineers, some liberal arts students, some history. You said like history a lot. Like it is very important. I love history. Like you lawyers. So of course this makes not only the business better, but it makes the global economy better as well. So yes, I want to see more and more diversity everywhere in every industry, not only finance.
Well, thank you for all that work. We really, Wharton's proud to partner with Girls Who Invest as well. We know you do remarkable work for it. Unfortunately, for our students, for high school students, it's something they should put on their radar because it's for undergraduates. It's not for high school students at this point, correct? It's just for undergraduate, for young women who are undergraduate.
We will go down in the high school level, but for our audience, once you're a sophomore, you can apply, right? So it's just around the corner.
That's right. So one more question for me, and then I want to get to the student question. So this is a question we've asked each of our guests over the course of this series in the past 3 months. So our students are in the early stages of their academic career, right? They're in high school. As you reflect on your own studies and learning, what skills do you wish you had the chance to learn? Or to consider it differently, when you're looking to hire someone, when you're looking out at the field, what skills or qualities do you look for them to have?
Okay, so if in finance, technical skills help, but that's not the only, or that's not the required skill, okay? And I would like to answer more like the second part of your question, like what are important, what are the important characteristics, and not just skills. And I will talk more about soft skills, and I think it is really important. And by the way, this is a question I ask my guest lecturers when they come. because the people that I host who come talk in my class, these are top level executives. So they've been there and they understand the big picture. They understand what is important. But let me tell you what is important to those people. They like integrity, authenticity, honesty. Someone who is trying to expand the entire pie, not just his or her own pie. That's important. Giving back to the society, giving back to the people. And I will say one important and another important point, which was made by a top investment banker. It's a really important person. He said, I was almost never the smartest person in the room, but I always ask the right question. And this is important. We generally focus on giving the right answers, but believe me, if you're curious about whatever you're interested in, if you're curious and if you can ask right questions, it gets you to the top. So that's important. And collaboration is important. And don't have a purpose in life, because the purposes, if you have a purpose, you would work harder. By the way, yes, working hard is great, but balance is also very important. And I would like to tell you, try to take 5 minutes, 10 minutes out of your daily life and meditate, pray, just think, just stop everything and just think, because this is how you're going to make your brain work better in the remaining 23 hours and 50 minutes in the day. So that's really important.
So speaking of great questions, we have some great questions from our students. We have lots of time to ask them. So please do me a favor and post your questions in the Q&A panel, and we'll see how many we can get to. So Sheila asked a really good question. What are some ways that you would recommend us to hedge risk in a short-term investment?
So there are, of course, we just talk about investing in stocks and investing in bonds. And when I say invest in stocks, you need to be careful. It's not just, don't add stocks in the same industry, for instance, because if you put stocks in the same industry, their correlation is probably higher. So you need to diversify in terms of industry, in terms of geography as well. So that would be the easiest thing to do.
So Maria had a great question, which one of the topics we did not bring up, which is odd because it seems to come up in every conversation, which is, how does an aggressive investor deal with a crisis? We're in a crisis right now, COVID-19, while maintaining his or her high-risk portfolio.
Okay, so there are different investment strategies, obviously. And if you're an aggressive investor, and if you have stocks which are stocks that correlate highly with the market, obviously this is a terrible time to be in. For some industries, I should say, not for everything. But when we look at investors that I deal with, private equity investments, they also diversify. So when they make investments, they say, okay, we're going to buy 10 companies, let's say. 7 of these companies are in the industries which correlate more with the market. But then we're going to put like utility stocks or utility companies, I should say. So it's something that would anchor their portfolio. So they do their diversification as well. They don't blindly go into, and people have been expecting recession in the last 5 years. So people did their own diversification. I mean, of course, there are contrarian approaches as well, and some of them pay off, some of them doesn't. But I just gave you the VC example, right? Like sometimes if you're aggressive, like even if you're if you think if something pays off, it would save your entire portfolio. And if it is your style, it is okay with your risk appetite. That's what you do.
Let's talk about COVID-19 and alternative investments.
Actually, it didn't affect alternative investments that much. So when we talk about, let me give you an example from private equity again. So in private equity, you collect commitment from different investors, right? And you have that money, let's say you have $1 billion fund. And these are commitments from Penn Endowment, from private pension fund, public pension funds, family office, and what have you. And then you start looking for investments. So for the PE shops who already had the funds and who were trying to look for investments, COVID-19 was a great opportunity, because for a very brief period of time, prices went down. So as the PE shop, you had a better negotiation power, right? So that's positive. The second one with COVID-19, this is a little bit different because we see the market effect for a very short period of time, and then the market recovered pretty quickly. So in that case, it didn't really affect their fundraising that much. I know they spent a lot of time on the investments they already did. So they made the investments before COVID, and COVID hit. Obviously, some of these investments were affected. So if it's a restaurant, let's say retail, they were affected. So they spent a lot of time to make sure that they will survive the period. Since the period was, let's say, shorter compared to a big recession, they didn't really do a terrible job.
Excellent. So we have a great question here. Sammy asks, what is your opinion on technical investing in stocks and alternative investments?
So it is a little bit different. So again, every time we say alternatives, it's such a big space, and my brain.
As you define for us, absolutely.
Yes. So I can tell you about private equity investment. It's very different because in private equity investment, you go buy a company, okay? And the idea is you're going to hold on to this company, let's say for 5 years, and you would like to make the company better operationally. So it is really it's really about value creation, and this is not long-term investments because you will hold the company only around 5 years. But within those 5 years, if you can increase revenue and decrease costs and generate more cash, then that's how you will make money. And I like that about private equity. So the technical stuff like stock picking is a little bit different. So it is more about market inefficiency, trying to find mispriced stocks, for instance. So that requires another skill set.
If students want to learn more, right? So you gave this, you attempted a really good definition. I think it is pretty clear. I mean, at least from the way you defined it, that there's no clear, easy answer to what an alternative investment is. But if students want to learn more, if they want to kind of really learn about this, where could they begin? What should they be reading or looking at?
There is really good. If you want to learn more about private equity or venture capital, I would just start with a Google search. We are now very lucky that you don't have to go to the library to find anything. So this is really where you would start. And there, I cannot recommend you good textbooks. But if you're interested in private equity, I can recommend this book, which is cute. I don't know whether you can see this is written by an Oxford professor, private equity laid bare. So you can start reading. And again, you don't have to know every detail, but you need to be a bit cautious. And I will say it one more time. You need to understand the valuation well. It is really that's one problem with alternatives. It is really difficult to understand the value. So if you're looking at stocks or bonds, you see the price movements. And in well-functioning markets like US, price and value are very, very close to each other, unless there's a bubble. I mean, there are the bubbly periods as well. But with alternatives, like in private equity investments, you go buy a company, a public company, you make it private. And while it is private, the private companies don't have to report anything. So it is almost like a black box. We don't know what that's why I remember when I began my talk, I said it's really difficult to do research in alternative investment. Yep. And that's the reason we don't really have the data. So it is really difficult to understand the value. Think about fine art. How are you going to put value in it? Cryptocurrency, which is crazy. At some point, Bitcoin was at $19,000. I'm looking at it as a finance professor, and yes, the technology can be valuable. I'm talking about the currency side. And it is really difficult to value something like that, a cryptocurrency, for instance. So to students, I will tell you, start with the basics, understand valuation well, and start with small amounts. Don't go crazy. When you're young, the empirical studies show that you are more risk seeker. So you're okay with taking more risk. You can afford it, and I understand it. But I would start small. Try to understand whatever asset class you're interested in. Try to understand it, and Again, there are so many different sources in the internet that you can learn more about them.
Excellent. So Miguel has an interesting question. I want to try to tweak it a little bit for you because you're an academic, you're not a professional investor. Miguel asked, what have been your biggest failures related to investing? So I think a little bit more, maybe something an idea that you were going down that really didn't work out the way that you thought when it came to investing.
I invested in Bitcoin, which was a huge, biggest failure, and so it was completely wrong. But I will tell you, when I put the money, I said, okay, I look at it not as investment, but I said it's gamble money. And by the way, I don't gamble. But for like once in my life, I said, you know what, let me try this. And I knew it was completely not smart. And I did it for whatever reason I did it. But yes, so what did I learn from it? Yes, don't be careful about valuation. Don't go against your gut feeling.
Okay, we got time for about one more. Before I get back to student questions, I want to talk about a phrase that also that I hear a lot at Wharton, and I want to make sure students understand it because you've been talking about it, and that's fintech, right? So financial technology, because you've talked a lot that some alternative investments in PE, and even as you talk about crypto, that's very much fintech. But then you were also talking a little bit about being able to get into this market by buying a piece of art or a piece of a car or a piece of a cow, as you said too. That's fintech. Can you talk a little bit more about what fintech is and how it's changing kind of financial services?
To be honest with you, fintech is really far from my expertise area, right. And it is something I haven't been that interested in, to be honest with you. It is definitely important, and it will definitely change the way things are handled. And I really like the technology part, obviously, and there are lots of big companies which make investments in fintech. But that's all I would say.
Okay. But it's doing interesting things, even in the alternative investment space, as you pointed out.
Oh yeah. So within alternative investment, we actually have fintech-related conferences, and we have different people working on fintech among our alternative investments program as well. It's just something that I've stayed away from.
Okay. So Tega asked, how do people create unique investment strategies when there's so much volatility in the market? You talked a little bit about in COVID-19 the volatility. What do you recommend? How do they make an investment strategy if it's such a volatile space?
So it goes back to what I just said. Like obviously, there are different investment strategies depending on what you expect to you choose depending on what you expect to happen in the future. But if you're talking about again diversification, and I'm going to go back to the basics. At the end of the day. It is all about, okay, are there any investments that can anchor my portfolio? And it used to be gold. Things change a little bit in the rest couple of years. But again, so if you make an investment in alternative investment, one good thing about alternative investment, they're not liquid, which means it is not really affected by what's happening in the market. So you can buy a piece of something, and if you hold on to it for like 10, 15, 20 years, which makes you a long-term investor, you're not going to be affected by short-term volatility anyway. So like Warren Buffett style, right? Like just think about like long-term investments. Similar to private equity investments. Remember, I told you the investments that were made before COVID. The PE shops, PE investors said was, okay, we just need to weather the storm. Once this passes, we are okay. Because if these were public companies, they wouldn't be able to see it, because when you're a public company, you're affected by market psychology a lot. So market can overreact. So it is very difficult to be an executive in a public market where there's lots of volatility. But if you make investment, if you're in a private company, you don't really, you care a little bit less, because again, the market is not having a heart attack looking at your stock price. There's no stock price, right? So that's a positive about alternative.
Excellent. Well, that was a great last question. Thank you so much for joining us. Introducing the world of alternative investments, I think, is really very much the tip of the iceberg for our students and for this topic. So we really appreciate you taking the time on this Friday evening to join us Thank you to all the students for joining us and for joining us over the course of so many great Meet the Experts. Again, if you want to go back and watch this one or any of the previous ones, they are on our website. You can find them on the Wharton Global Youth Program page under the investment competition. So thank you all so much. Good luck to our teams that are competing. We can't wait to see your final reports next month. Thank you so much, Burcu. It was a pleasure.
Oh, thank you, Eli. That was great. Thanks.
Thanks.